lunch hour. Over the next hour, we're going to try to accomplish a couple of things. To start, we're going to be joined, maybe get to slide 3, if you would. We're going to be joined by a really great panel, including Jamie Butterworth, the founding partner of Circularity Capital, Lisa Kleisner, the co-founder of TONIC, and Gerald Neighbor, the vice president of sustainable finance at ING, to talk about a new report that TONIC, TIIP, and Circularity Capital collaborated on, investing in the Industrial Revolution. So really just to give everybody a kind of roadmap for the session, we are going to go through some key findings, discuss, open it up to the panelists for a discussion about some of the ideas that surfaced from the research, open it up to Q&A where all of you folks listening in are going to shock and awe us with great questions that will hopefully inspire some new thinking, and then we'll close it out. Just one thing, I saw that Greg had switched over to the recording notice, just in terms of how folks ask questions. You'll be muted, but you can, it looks like you can pose questions via the text box at any point. And we are happy to take questions throughout the session, as well as kind of collect them all so that when we open it up after the panelists are done, we can start working through them. So I think what we could do is go ahead and jump to slide 4, just to give everyone a bit of background on both TIIP and TONIC. TIIP is a data, tools, and guidance provider to institutional investors looking to integrate a systems level context to their investment decision making. We do this in a couple of ways, through a database, through tools, and through events, with a subscriber base that includes asset owners, asset managers, and the folks that advise them. Going to pause right there, maybe punt it to Adam or Lisa to give us a little bit on TONIC.
Yeah, I'll do that, Bill. So hello, everyone. I'm Adam Bendel. I'm the CEO of TONIC. And TONIC is a community of individuals, family offices, and foundations who are active impact investors globally, really. We're all across the world. We work across asset classes, and our members focus on specific asset themes, but impact themes, but across all of the impact themes, really, that you'd be familiar with. And we do our work in a similar way to TIIP. We provide education and tools to our members. We gather in a global community of online and in-person events, and then we curate investment opportunities for our members. And then we also do field building like this and create tools that we both share for our members, but also share more broadly in the impact community.
Great. So Adam and I are going to now give you guys a little bit of, all of that sounds great at a conceptual level, but what does that actually mean in practice? So if you can go ahead and switch to slide 6. So just to give you an example of how TIIP and TONIC resources work, and are in many ways complementary. So right now, a lot of investors are attempting to align their investment practices and programs with the UN SDGs, the Sustainable Development Goals, which is fantastic. But what TIIP does is essentially helps investors go from just basic alignment to being able to demonstrate progress, both in terms of developing strategies and frameworks for identifying systems that are relevant to a particular investor's practice, and then giving the kind of guidance, the tools, the database of being able to compare across investors what folks are doing, and convening power to network with other investors that have a similar interest. So that's what this very detailed infographic shows you. It's just some of the resources we've developed to be able to take folks from alignment to implementation. Adam?
Yeah, and so next slide, please, Greg. So we do similar work, and we've developed an impact theme framework tied to the Sustainable Development Goals, which is available on our website at the link you see up there at the top, tonic.com/SDG framework. On the right-hand side, you'll see the beginning of a list of 55 impact themes that our members are investing in, and organized against the SDGs, which allows them to track their progress over time in both changing their investments to be more directly aligned with the SDGs that they're interested in, and then also tracking impact progress against the 169 specific SDG targets for 2030. So again, quite complementary resources between TIIP and Toniic. Bill?
Fantastic. All right, so we'll go ahead and advance to the next slide. So why are we all here? TIIP, Toniic, Circularity Capital, we worked on this body of work, investing in the new industrial revolution, over the last year and a half or so, in collaboration with a number of big players, including CGI, convenings of investors, both abroad and here, to really begin to understand the emerging interest in the circular economy and what that might actually mean for investors looking to move in this direction. Because TIIP is focused on systems level investing, identifying where the kind of pipelines of investments might be that are of interest to investors of that orientation is a huge interest to us. And so we saw a lot of interesting parallels with the circular economy, and that's really what the focus of the report is on, is really framing the circular economy as a investment proposition for asset owners and managers. So go ahead to the next slide. So here are the kind of high-level points of the report and what we'll aim to cover relatively quickly here, and then open up to a discussion with the panelists. Go ahead to the first point around growing demand by investors for these kinds of investments that address systems level considerations. Go ahead to the next slide. So what TIIP has done is really looked at this kind of broader world of investors that are beginning to not just, what we focus on is investors that are not just beginning to integrate environmental, social, and governance factors, but also impact investment considerations, concepts like universal ownership, a number of these kind of key indicators that investors are on the road to considering broader systems. Over the last year, we did a body of work where we focused on profiling a number of these investors, which you see here, 50 of them, and they range in scope and scale, ranging from pension funds, sovereign wealth funds, to mutual fund companies, diversified financial services players, so on and so forth, that are all beginning to make inroads towards this idea of systems level considerations within their investing. But it's not just bespoke investors that are beginning to move in this direction. Go ahead and go to the next slide. A number of the key enabling organizations that are helping to create the environment for this kind of activity are beginning to embrace this focus and are promoting it similarly. So you have everything from Bloomberg's task force on climate-related disclosures that has recently released recommendations to policymakers on how they can help create this enabling environment and incentivize industry activity to consider climate change as a systems level factor. SASB is increasingly looking at the KPIs that make up its all of its system of kind of key performance indicators that across industries that compose the US economy, and really beginning to better understand how those key KPIs in individual industries roll up to a macro level, and what kind of macro level insights could be garnered from that. The PRI, one of the kind of key principles for responsible investment, a UN-led initiative, has recently launched a sustainable financial system program that is looking at systemic financial risk, which is very much a complement to a lot of the stuff that TIIP and Toniic are thinking about, as well as the UN releasing their Sustainable Development Goals, which is really very clearly in a number of very colorful and succinct ways identified systems level concerns that as investors are trying to galvanize around. To go one more slide. Next slide. Yeah. So some specific asset owners and managers and key stakeholders that are beginning to go in this direction. So the governor of the Bank of England has been not only involved in the task force on climate-related disclosure, but has generally tried to raise awareness about the systemic risk, particularly of climate change, for investors, really arguing that once climate change truly becomes an issue and begins to have a material impact for the insurance company, that it will actually be too late. You have asset owners, such as the Jesse Smith Noyce Foundation in New York, $50 million foundation focused on social justice that engaged in an open call for a new advisor last fall, where they actually asked questions in the RFP that they shared that raised questions around systems level considerations for social justice. Are there SDGs that align with it? How might they measure it and report on it by their new asset managers? And then you have key asset managers like Cornerstone Capital Group that are attempting to connect ESG frameworks to systems level impacts. So this is all a long way of saying that there's a lot of investor interest in opportunities and strategies that relate to or that get to the systems level. And what we found, which we'll go to the next slide, is that the circular economy is one of the key areas that could potentially be not only a source of interesting insight and innovation generally for companies, but also a potential pipeline of interesting opportunities for investors moving in this direction. So I'm going to go ahead and pause here and hand it off to the co-author of the report, Jamie Butterworth, to take it from here.
Hello, everybody. And thanks very much, Bill. Thanks for the introduction. And what I propose to cover now is a little bit around the circular economy itself in terms of what it is and why we see that as an opportunity for investors, and also look a little bit about what that means in terms of the challenges for businesses making this transition and how we can accelerate that transition. So if it's all right to move to slide 14. I think if we look at the circular economy, one of the ways to start in terms of where's the opportunity is to look at the way we tend to create value in the economy today, which is predominantly very linear. We tend to dig something out of the ground, turn that into a material or a component, manufacture that into a product, use that for an increasingly short period of time before disposing of it, and in that process losing a lot of its value. So if you look at something like fast-moving consumer goods, we put $3.2 trillion into that part of the economy each year. We lose 80% of that. If you think of the iPhone in your pocket or the iPad on your desk, we lose about 98% of the value of those products by disposing of them over an increasingly short period of time, now around 2 or 3 years' time. If you look at something like plastics, 95% of all plastics globally end up in landfill or disposed of outside of landfill in kind of ecosystems. So effectively that take, make, dispose system has some consequences, but also a lot of value is being lost throughout that process. Now there are also some mega trends that are causing businesses to think differently. One is increased price volatility. So simply a change in price of input commodities. The second is concerns over certain, so think rare earth metals that are increasingly used across the economy. Then we've got increasing demand we'll have between now and 2030 coming into the economy and consuming like the Western world every 32 days. So massive increase that is going to have an impact on global supply chains, and corporates don't quite know at the moment if you ask them what that means, but they realize that will be a factor in that linear model. And finally, you've got technology, and technology is enabling us to know more about the location, the condition, the demand patterns and status of components, products, assets within the economy, and ultimately starting to evolve business models towards ones where we're starting to buy the performance of products as opposed to physical products themselves. So what the circular economy does effectively, if we can move on to slide 15, is to provide a framework for an economy which is regenerative by design. And it does that by looking at an economy where we have two defined metabolisms. Technical products, materials and components are designed to cycle using the minimum amount of energy, which ultimately comes from renewable sources, and the biological side of the economy, which is kept separate, where products and materials are designed to regenerate through that part of the economy. And ultimately, we seek through this model to capture more value. One of the ways that I first got involved in this space was I was lucky enough to be part of the team who set up the Ellen MacArthur Foundation back in 2009 And the first thing we did there was to do a big piece of analysis with McKinsey and a group of corporate businesses to look at how the circular economy can create value within the economy, the conclusion of which was that in many industry sectors, we can actually create more value through these circular business practices than traditional linear models. And so to kind of delve into that in a little bit more detail, what is the benefit for investors? And effectively, if you break down what the circular economy is doing, it's enabling you to create value through three levers. The first is the ability to keep products operating longer. And that often goes hand in hand with this shift away from selling a product to selling the performance of a product. So if I, for example, shift like Philips are doing from selling healthcare machines like an MRI scanner to selling imaging, I then become the asset owner and I start to optimize those products to be maintained and to be used for longer to be able to extract more value. The second is to enable higher utilization of assets. And we're seeing an explosion in those business models driven by technology. Now we know more about where assets are within the economy and how we can use those, not just in B2C, but across the B2B spectrum as well. And the third is the ability to consciously cascade a product or a material or a component over a series of use cycles. So if you take the mobile phone in your pocket and you recycle that, you'll capture less than 0.5%. If you can capture it after one use cycle, put a new screen on it, refresh it and sell it into another market, you capture around 60% of its value. And in the biological side of the economy, this is about optimizing products and components for regeneration. So if done correctly, this is improving customer stickiness, it's improving visibility and quality of earnings, and it's improving margin stability. So this is impacting the valuation and the profitability of individual businesses. And that's really creating an opportunity for investors effectively. If we can skip now to slide 20. So in terms of the benefits, there are a number of benefits from this. One is obviously the ability to generate financial value. The second is the ability to massively decouple our development, our economic development from primary resource inputs. So at the moment, we have a model where we're reliant on virgin inputs to create growth. This is starting to decouple the economy from that reliance on virgin inputs and starting to build a regenerative model for economic growth. There's two other things which are kind of side effects of this. One is we found that the framework itself is very generative of impact. So it starts to create a framework for innovation, and we see that in businesses operating in this space. And the fourth thing is around job creation. So ultimately, if orientated in the right way, like the Ellen MacArthur's Foundation's report on European growth in the circular economy, we can also start to generate interesting employment opportunities through this approach. So finally, just to go to slide 23, there are a number of challenges in the shift towards the circular economy. There are a number of kind of idiosyncrasies in that shift. So for example, the fact that design is impacted. So ultimately design complexity and the ability to separate materials and components to be able to get them to reflow within the economy, through to finance, for example, around cash flow. So if we're moving more business models from selling product to selling product as a service, there's a cash flow implication there. There's also a contractual implication in moving towards longer term agreements, for example, with consumers to be able to get products back into supply chains. And there are legal implications of that. So the shift towards a circular economy is a huge opportunity, but there are some specific challenges which need to be overcome in order to unlock these opportunities for investors and for businesses operating in this space. And I think we have some interesting panelists on the call who'll be able to illustrate that in more detail in due course. So I'll stop talking now and hand back to Bill.
Thanks, Jamie. And what I would say is, as you start to think about that connection between the circular economy and investors that are beginning to adopt this kind of systems level orientation, one of the key features here is that a lot of what is currently practiced in the impact and ESG investment space, that these investments don't necessarily transcend simple measurements. So they're focused on simple measurements like pollution outputs or tons of waste recycled, but they don't necessarily give weight to things like product design that maximizes product life cycles, or business models that embrace service-based approaches, convert customers into users, or close the kind of circular link of material use and promoting overall efficiency. All of the features that Jamie described, which there are some of these slides in here that when we share this broadly, you'll be able to start to see some of these key features that you can begin to see the distinguishing feature of what we talk about when we think about the circular economy versus other traditional investments that are often associated with ESG or impact investment. So we go ahead and skip to the next slide, just to give a sense of that this is not a particular asset class, that this really is something that can be integrated and embedded across an entire portfolio. So if you're looking at public equities, you can point to something like As You Sow, a kind of shareholder collective where they have actually been able to, through shareholder engagement, influence Dr. Pepper Snapple to adopt more circular economy practices within their supply chains. There are examples like this throughout, which we're going to get to because we fortunately have a number of leading investors doing this work. But just to say that this is not just a particular asset class where this is practiced, but one that can be part of entire portfolio construction, which is one of those key features that systems level investors are thinking about as they begin to integrate this across various investment activities. And just to kind of go to the next one, in the report, we highlight slide 25. We highlight a couple of investors, including PGGM, Closed Loop Fund, ING, European Investment Bank, including Circularity Capital. This is an example of a profile of what TIIP focuses on when we think about these kinds of assessments. And fortunately, yet again, we have Circularity Capital and ING present on the panel. So I'm not going to go too deep into these, but just to say that there are different, it's not just that there are different kinds of possibilities across asset classes, but there are different kinds of investors that are engaging in this, that essentially everyone can have an entrance point. Go to slide 26. And this is just really to close it out to say that part of the research also zeroed in on a couple of key opportunities. If you go ahead to the next slide, looking at various areas where this intersection, the synergy between investors and the circular economy can help mutually reinforce both. In terms of circularity measurement, the Ellen MacArthur Foundation, as Jamie mentioned, they are focusing on developing circular materiality indicators. To the extent that these indicators align with a lot of the existing measurement and metric frameworks that are currently available that many of TONIC's members and TIPS members utilize, the more that alignment can be tight, the better. Really, yet again, demonstrating that this is not just a particular asset class opportunity, that this is really a lens that can go across portfolio construction, that there are interesting financial modeling techniques and capital stacks that impact investors have really pioneered. Many of the folks on this panel, yet again, we're going to talk to them about how they approach some of this. And then just this opportunity of really seeing this as an opportunity for investors that are looking at this as a great pipeline of opportunity. So yet again, go to next slide, 28. Key findings from this: demand is growing by investors, that the circular economy is something that is only going to increase in awareness and activity. Amazing intersection of opportunity where these two worlds collide, and that there are things that advocates can really benefit from in terms of financing opportunity or financing sources, and that investors can really look at various opportunities across the board in this area. So I'm going to go ahead and pause there. We'll go to slide 29 for Q&As, or I'm sorry, rather the speakers, and bring the panels in. And I'd like to basically start with Lisa first, if we could, and really open this up to, one, give us a little bit of a sense of what TONIC members might be doing in the circular economy space, and just the kind of breadth and depth of activity that you guys are starting to see.
Hi, good morning. We're seeing a lot, actually. I just got back from 2 months in Europe and working with our TONIC members there, but also coming alongside a lot of institutional investors. And it's an interesting thing to see that it's almost a wave motion with circular economy, where we see a lot of the individual investors and foundations and family offices already embracing the idea of the circular economy in terms of norms that they use in their due diligence process. On the fund manager side, we're seeing an uptick and sort of a aha realization that this is an important part of backtracking and looking at their thesis, their fund thesis, and then messaging how they're approaching the space. So to give you some examples of what I'm talking about, there's a project that's going on right now with Bridges Fund Management, where Clara is looking at norms. And if you look deeply into the norms project, this is distilling what are the norms that we're seeing across impact management that we can begin to have a more aggregated discussion around. Well, what I see coming out of that really are norms that, if you look at it, are very much touching the whole area of circular economy, because these norms within circular economy actually in most investments play some role, if not a pivotal role, in the product and or service that's being considered. The other thing that I think that needs to be mentioned is the whole divest invest movement. A number of our members are leaders in this and participating, and I think that the divest invest is squarely targeting this idea that externalities need to be priced into the balance sheet. And that particular exercise is completely and utterly part of the circular economy discussion. And so if we take that, and that's a global movement, and we start to look at other aspects of the impact investing sector or industry, you're going to begin to see that there are, I would call them kind of subcategory targets that align very much with the divest invest in other categories. And then another one that another observation that I see is this move to evergreen funds. So, you know, we used to be all about closed-end funds. There were a lot of issues with evergreen funds, but folks now, impact investors, are looking at their investment portfolio and their engagement with their investees as a longitudinal engagement over time. So they're looking to capture a more meaningful value from their investments over a time horizon in an open evergreen fund. So Aquaspark in the Netherlands is a great example of that approach, where they're looking at the aquaculture ecosystem across different providers along the value chain, and looking to capture that value and hold that for their investors over the long term. So I hope that gives a little bit of a flavor how our members are looking at incorporating, I would call it, the norms of the circular economy in the way they look at their investment policy and how they're actually actionably taking it to the investments that they make. Thank you, Bill.
Yeah, no, that's fantastic. And I'd love to bring Gerald into this now, simply because you're coming at this from definitely the debt side, from a bank. Maybe give us a little bit of color how you guys are beginning to cut at the circular economy, both in terms of the kind of broader ecosystem building that you're engaging in, but also how you are working with various investors. I did have the pleasure of just doing a panel with your colleague Leon, and he talked about how you guys are now starting to think about incorporating Sustainalytics data as a way to performance along those lines can adjust interest rates that you lend with. It's really exciting stuff. I think it adds a couple more layers to this. So Gerald, if you could come in and talk a little bit about how you guys think about the circular economy, and to what extent some of the trends that Lisa was reflecting is also, you're seeing that in your own work.
Yes, thank you for having me and for the question. Maybe just to start off, ING is a European-based bank where we have a lot of retail presence, and our wholesale bank is a global operations. And specifically, maybe just to touch upon what you asked before, the last point, we've been engaging and trying to understand how we can finance sustainable clients and sustainability for a couple of years already. And indeed, we incorporate data from sustainability raters such as Sustainalytics and the various others into our financial decision making. So when we want to grow our portfolio, we currently are about nearly 35 billion of our wholesale banking activities is labeled as sustainable. We want to grow that over time. And as a consequence of that, we're also trying to look out further and see what are sustainable companies doing, what is the new frontier. And indeed, going into circularity and picking up circular models is what we see happening at quite a few clients here in the Netherlands, where I'm based, but also across very many other countries. There's a growing interest, and I think for a very good reason that Jamie all pointed out, but very simply also because it's a good marriage of being more sustainable and creating long-term value, and at the same time it's all about business. So it's business models and creating improving revenues and profit. So I think that there's a lot of interest there, and what we see is that corporates, SMEs, mid corporates are all trying to understand how they move forward on this agenda, and there's a lot of piloting and trying and testing. There's again much willingness, but also a lot of questions, and I think also the report points out quite a few very good phrased challenges in there. What business model really works, and what risks do they take on if they, for instance, switch from selling a product to selling a product as a service, or if they want to maybe increase very simply just the recycled content of the products. Are they then taking on more risk, or is it even doable in their supply chain? All those questions are on the table right now, and then from our side, of course, as financial, we want to understand how we can support them. Do we because Jamie already mentioned before, there's an issue of cash flow, there's an issue of credit risk, and those are typical risk issues, of course, that we are familiar with, and I think we can help them in structuring and providing answers to that. We don't have all the answers. We're still keen to work with many partners in understanding how we can support them. But there's some really nice examples of companies taking the lead and just basically going out there and trying it, and sharing their knowledge and getting the whole sector towards a more resilient approach.
That's fantastic. So we have two interesting perspectives. One from the kind of world that Lisa's coming from, Toniic, where it's a real broad cut of investors engaged in this. We now have a kind of big European bank. Jamie, I want to bring you back in. And how are some of the trends or motivations that each of them highlighted, how are those starting to play out in some of your own work? And I know that Circularity Capital just had a major close, so that's exciting. You guys are obviously growing fast. So maybe tell us a little bit about your guys' experience thus far.
Yeah, so I think one of the things that we're seeing, so Gerald alluded to the fact that we're seeing, and Lisa, that we're seeing more and more businesses operating these types of models. And they're doing that for various purposes, but I would say primarily they're due to giving themselves a competitive advantage and looking to build the long-term resilience or sustainability of their operating models. And because that is happening at a corporate level, that's also creating a lot of opportunities for small to medium-sized businesses. And I think it's creating opportunities in primarily two ways. One is businesses that are sitting within the supply chains or extended supply chains of those corporates, acting as enablers to help them to make that transition. So it could be that they've got enabling solutions around data or materials, or it could be that they're simply, for example, remanufacturing components within the supply chains of those companies. And the second is a lot of these new business models, for example, in the shift from selling product to selling products as a service, are being trialed and tested and ultimately proven by small to medium-sized businesses, which are often able to innovate more quickly and in some instances disrupt the incumbent linear business models. So our kind of view is that that in itself is thus creating an opportunity to do two things. So one is to actually finance those businesses and support them in their growth and innovation in the circular economy. And in doing so, that is actually accelerating the transition to the circular economy, because that's providing the types of capabilities that will ultimately be required to make this happen at scale, and in particular within these corporate supply chains. And so the more kind of granular, I guess, we get on seeing where these companies are and what they're doing, the more it's possible to start to kind of map out a pattern to say within a population of those types of businesses, what are the particularly attractive characteristics of these companies, the attractive market segments within which they operate, and, for example, what are the common challenges that they would face, and how can we then support the management teams of those individual companies to professionalize and grow faster, and ultimately unlock the financial value creation, have a measurable non-financial impact, because that's one of the exciting things about the shift from linear to circular, is that it's about resource productivity effectively, which is something that we can measure and track, and then also supporting the acceleration of the circular business practice of these bigger corporate players.
Fantastic. Yeah. And I think it picks up on some of the norm discussion that Lisa was making reference to, just kind of figuring out how you begin to identify these opportunities in different sectors, different regions. Maybe we can do a little slight shift now and get into this kind of overarching question of what it actually takes to make investments in circular economy opportunities. And maybe we could go back to Lisa. How do you start to talk to members about taking steps in this way? And how do you begin to even just educate folks on circular economy, the key features that they should be thinking about, the strategies they should be engaging in? So for potential investees, where do you start?
Well, I want to first say that the circular economy is an interesting concept because I think most impact investors have some aspect of this in their theory of change that they're targeting. What was great about pulling the paper together and I would say seeing a little bit more on the philosophy and the operationalizing of the concept. Sorry, that's a big word. That it begins that impact investors are beginning to recognize the work that they're doing in the framework that the circular economy has promoted. A second part that I think is interesting is what a lot of folks, when they're first starting impact investing, the first thing they want to do is they want to know what they own. And so the first step is taking a look at what you've got in your portfolio, detoxing it, right? And then thinking about the next step about what are the impact objectives that you want to achieve in your portfolio. And the circular economy provides a really slick list of, I would almost call it a smart checklist for looking at the detoxification of your portfolio to measure and gauge just how far along a particular investment or investee is on the pathway to recognizing where they are on that continuum. And the other thing too is I think it's a very how should we say, it's a benign conversation that you can bring to an investee that's not threatening, where you can sit down and have a discussion around the risk mitigation opportunities that are presented and taking a critical look at where they already align with aspects of the circular economy and where they don't. And so there's a number of ways I think our members are using that tool to begin their own personal conversation about how they approach the space, to recognize the norms, as you pointed out, and I also pointed out, within their existing portfolio now, and then how to have a constructive conversation with their investees.
Okay. So is that, Jamie, I'd like to bring you back in. When investors are coming to Circularity Capital and actually investing in you guys, I mean, what is the conversation like? Are you experiencing it in a similar way to Lisa? Is that how you are engaging investors? And to what extent are folks coming to you with a kind of preconceived notion of what the circular economy is and that you have to then inform or otherwise enhance?
Yeah, so it's been interesting actually over the last sort of 6 to 10 months in talking to a lot of investors that we had originally noticed that whilst the circular economy was really quite well understood as a term, I would say, within the corporate world during that period of time, possibly less so in the investor community. However, what we decided upon early on was that shouldn't really be a challenge. This is more about the fact that a linear kind of take, make, dispose model is losing a huge amount of value, and that by applying a holistic framework in terms of design practices, supply chain setup, and business model, we can create more value. And businesses that do that well are likely to outperform their linear counterparts. So having spoken to kind of quite a large population of whether it's institutional investors, pension funds, whether it be corporate investors or family offices, it doesn't take that long for them to say, okay, I get exactly what you're talking about in terms of these linear business practices. And in fact, I've seen indications, or I've seen small examples of that in these types of different businesses. And so I think the kind of language side of it is possibly not so important in terms of whether it's called the circular economy or not. I think the thing that we found really important is to get investors to get to a point whereby, first of all, they say, okay, we completely understand how from a value creation perspective, this makes more sense, and we can see illustrations of that already, and we can understand how we could create more value from that. And then almost afterwards, they tend to say, and there must be some really interesting, measurable, non-financial impact from this, at which point we can say, oh, it's interesting you say that. Absolutely. And in fact, most of these companies are already at a management team level looking at, for example, the CO2 savings or the ability to use less water within these practices or improve resource productivity, etc. And so as an investor, for us, it makes complete sense for us to be able to monitor at an individual company level what's happening from a non-financial perspective, because it's so aligned with the business plans of these companies. So in our kind of model where we take a board seat in every company we invest in, that's something that goes into the KPIs before the investment is made. So I think kind of I would agree with what Lisa is saying very much, and kind of to add to that, just the point that from a financial perspective, in terms of making sense as a framework, I think this is something that investors, they understand, and they are already have examples of this within their kind of history of making investments.
Okay, so I want to go ahead and bring Gerald back into this, and both understanding how maybe some of these conversations are playing out with your own work, but also when you guys start thinking about potentially extending financing to someone, what are you looking for? What are those kind of KPIs? What are the things that tell you guys that there's a there?
I think that I can answer that in two ways. Firstly, it's really comes down to the business model, and that's where a lot of the innovation and the work is being done by companies moving towards the circular approach. Saying, okay, how does our business model go from a linear to a circular? How do we make money and earnings out of this? How do we engage with our clients? What kind of contracts do we need? How is our cash flow management, or more detailed in how their business is operating, and what kind of changes they have to do to extract that value and keep control over it. So that those are examples of companies. Ideally, they also would look at the design of their product. As Jamie mentioned, there's so much value lost in after a product has been used. It's very often the case because it was not designed to be used in a second or a third way, because it was glued together, or it was never smartly designed. So those things happen, and eventually they have to find ways to contractually bind customers to a win-win situation where they find a pay-per-use model, or they find another model where they allow a customer to use a product, be happy with it, be serviced for the time of the duration of the contract, and at some point the producer will get back the resources of the product, and then find secondhand markets or refurbish it and cycle it back into the economy. So looking at those models and understanding the risk there, that is a key proponent of working together with our risk street, with our innovation department, understanding how we can service those clients. And I'm not saying everything is new here. I mean, we have seen sharing models, pay-per-use models, for leasing models for a very long time, but it's bringing that knowledge together in a different setting. And maybe just an example, if I speak to a leasing colleague, they always immediately bring up the aspect of residual value. And residual value very often means, like, in an example of leasing a car, the leasing organization gives it to a corporate or a private user, and after, let's say, 5 years, the car comes back and they basically sell it off, and then that's where they make the money on that residual value. That is, in that sense, not fully circular, because they lose control. They have no idea what happens to the car in a second-hand market. But so if you, as a producer, you want to think about, can I keep my product in economic use, or can I maybe even get it back after first use and then redeploy it in the second-hand market? That residual value becomes a whole different concept. So those are, as an example, things that we have to deal with in financing those models. So that's one side. And secondly, which you brought up earlier, and that's maybe a little bit more of an asset management approach, we have indeed developed a new product where we link the sustainability or the ESG performance of a corporate to the interest margin they pay on their loans. We just tested it, and it's been quite well received by the market and by other by critiques and by other financial institutions. And I think progressing, we will probably also connect in the same way the circularity of a company to its margin. So if they are able to increase their resource productivity or their the productivity of their products, or on the other side they are less dependent on virgin resources. Either way, those will be probably metrics that also we can connect to financing aspects such as the interest margin or mid tenor or what have you. That's going forward. To get there, we need, and that was also mentioned in the report, more data and more ability to measure and track and really understand how circularity adds value. And so the measurement of circularity is a key enabler for these products and these way of thinking. And I think there's good progress made, but we need much more thoughts on this and more people to connect and help us in developing this.
That's great. I think you highlight something. I literally just did a panel where a number of the folks that were in the audience just kept emphasizing the need for education. And I wonder, before I'd like to open up questions to attendees of the webinar, so feel free to fire away with questions. But I would then maybe tee up the panelists with the general question of, how do you become a better consumer of circularity or circular economy information, opportunities, pathways in? You each have talked about and made reference to different resources, different dimensions that you look at, that you consider. And I just got to imagine that for any investor that's beginning to go in this direction, this has got to seem overwhelming. And I know for sure, Lisa and I have commiserated that I think we've encountered a lot of impact investors that have equally been kind of overwhelmed, just because there has been a level of diversity of perspectives and resources in this space. So maybe start with Lisa. How do investors become better consumers and actors in this space? And what's the first, or the kind of nice first step that they can take to move in this direction that won't be overwhelming but teaches them something?
Well, I think I covered that a little bit in my previous comments, but I'll reiterate it. And that is, I think you need to start where you are and find what you're already doing or already purchasing that already meets some of the circular economy norms. And I think that's an important step to take, because once you evidence it in your own context, then it's a lot easier to start then questioning and building and adding on to that and building your own personal, I'll call it rapport with the concepts, and then you're better able to identify them as an investor and a consumer as you then go to the marketplace for both investment product and for consumer product.
Great.
In terms of how you do that, I think that there's a challenge to the industry, and that's, this is a relatively new way of looking at it's been out there, but it's being framed differently, and I think that's the power of it. It takes a lot of were seemingly diverse aspects of how we all looked at our investments and our purchases, and now it's asking us to step back and rethink how we prioritize and look at these aspects of the economy. And I don't think that there's enough educational material. I think that the report that you've done is a big step, but I think what we really need is we need practical examples, and we need some of the sites that are focusing on consumer goods to begin to adopt or elevate up the circular economy norms and point them out in products to help us as consumers.
Yeah, great. I want to ask the kind of that digestible entrance point to Jamie and Gerald. But first, we did get a question from the audience, and I think this one's directed at Gerald. Wondering if you could please explain the interest rate model that was mentioned. So perhaps you could add a little more paint on the canvas of that one.
Sure. That was we call that product the Sustainability Improvement Loan. And it's on offer for corporates who have a clear approach to increasing their sustainability performance, which is very often expressed as a score by a rater. And in this case, we work together with the sustainability rater Sustainalytics, and we have done a RCF financing for Philips and for Barry Callebaut. Both are in the market. Philips took out a loan of 1 billion, And basically what we have agreed upon is that if Philips improves its ESG score, so the score given by Sustainalytics within the next review cycle, so that's 12 to 18 months, if they improve their score, they will get a lower margin on their loan. But also the other way around. So if they deteriorate, their score goes down, then they would have to pay premium. So that was syndicated loan with 16 other banks, and that was quite well received. And I think it illustrates, for the financials from our side, but also from Philips, how they take their approach to being more sustainable, not only in their operation but also to the financing level. And I think we were quite happy with the reception, and Philips also quite happy with this product. So I think there's a good market demand for more of these products.
Well, and it's definitely something I think the more that Sustainalytics as part of that system starts to integrate circular economy dimensions, I think that becomes particularly compelling to the group listening in here. I'd like to bring Jamie back in. So thinking through maybe there's the working group finance, there are other folks that are maybe attempting to try to address some of the dimensions that Lisa mentioned. And I wonder, what are you seeing out there in terms of folks that are helping to kind of shade in the gray spaces for people to be able to better understand these opportunities and engage further? And you might have yourself muted. I think you do have yourself muted. There you go.
I've unmuted myself.
There you go.
Yeah, so I think in terms of who's operating in this space and kind of areas where there's a lot of collaboration, there's one, I think, which stands out, which is this Circular Economy 100 group, which is operated by the Ellen MacArthur Foundation. And the aim of it from its initiation was simply to say that more value will be unlocked through the circular economy if different actors are able to collaborate and talk to each other and share opportunities effectively. And so that group now includes a very large number of corporate businesses and also some kind of government entities that are operating in the circular economy. And there's quite a lot of information you'll find on the Foundation's website around that in terms of how that works. The other thing I was thinking is in terms of what sort of resources are out there. If I was on desert island discs, you don't have that in the US, but that's where we're asked what we'd like to read, I think, if we were on a desert island. And I had enough time, I was thinking, what would I read? And there's 3 books that I would read. I would read Biomimicry by Janine Benyus. I would read Cradle to Cradle by Michael Brandgardt and William Madonna about design. And I would read Industrial Ecology. I would read The Performance Economy by Walter Stahl about this whole business model shift. That's pretty dry going. But those basically are almost they're the kind of different elements that this whole idea draws from and aims to bring together in a framework. And the other thing that I would point towards, again, is in terms of actually, why is this interesting from a financial perspective, really boiling down outside of the fact that we would like to shift from an economy which is take, make, dispose, and there are a number of kind of issues with that. Why is it an opportunity? And I would go back to that first report towards the circular economy, which has the analysis from McKinsey looking at part of the European economy, manufacturing, lots of company cases for why is that creating more value? What are the kind of levers which are at work? If you don't have that much time and you have an attention span that's more 2.5 minutes, we can share a couple of YouTube videos, which I think are great animations, which I've always used to kind of share with people after they first come across the concept and to really kind of distill what the basic fundamental ideas are behind it.
Okay. Someone just asked, can you repeat the name of the first book?
Yes. So Biomimicry by Janine Benyus.
Fantastic. So I'd like to make this maybe just a little bit more practical while we're in the home stretch and have each of you maybe point to the kind of interesting illustrative example or just thing that you think of an investor that's getting it right as they are moving in this direction. So either maybe focusing in on a particular transaction that you thought they did it. They figured out how to best help and cultivate a particular opportunity that they invested in, and or that there's just a overarching strategy? I know maybe for Elisa and Toniic, I know Sonen's done some really interesting stuff, which is a key member of Toniic, but really just kind of giving folks some kind of interesting stars that they might look to for some inspiration or insight into how to go further in a practical way. So I don't know who I want to put on the spot first, but maybe we'll go with Gerald. Maybe you guys have something that you guys have worked on that was particularly impressive.
Very good question. What I would point them to is basically I would read up some of the strategies that some of the corporates that I member. Most of them that I know, I have good examples. I'm a member of the CE 100, which Jamie mentioned before, the network of the Ellen MacArthur Foundation. Some of those corporates are really well understood how the circular economy can add value to their business. I think that is, examples would be Unilever or ExxonMobil or DSM. I think those are leading examples of corporates who have really understood it. They know where their impact lies. They know which products actually which raw materials and resources are key to their survival, to their operations, and how they monetize that and make that really stimulating their business and creating long-term value.
Fantastic. Lisa, I'll turn to you next.
Here we go. So we recently did a report. We issued it December last year, which is called the T100 launch. And in there, one of our members is spotlighted, and her focus is on the circular economy. And her name is Dita Lisgard-Vind. And what's interesting about her, she's a millennial, number one. Number two, in exploring that topic with her portfolio, she saw a business opportunity. And this is pretty common with millennials, that once they really understand what's at play here and they get educated around the concept of within the impact industry, they begin to seek out either a career path that can allow them to actionize that skill that they've just gathered, or they're going to build their own businesses. And she actually took her emerging knowledge in this area and started a consulting service. So what she was learning through her investees, she now wanted to plow back into other opportunities. And more recently, she brought an investment opportunity, which was an early stage, arguably early stage, but very innovative enterprise. It's an architect who's experimenting with building material reuse in a very interesting way. And so we saw this presentation in Berlin. I would say my hot tip here is keep an eye on the millennials and what they're investing in and what they're putting their career bets on.
That's great. Yeah, it sounds like this example represents all of the kind of key trends converging here, which is great. It's definitely T100. There's a couple reports associated with that, so for sure, encourage people to check it out on Toniic's website. And I'd like to, now that we're definitely in the home stretch, got about 2 minutes left, I'd like to punt it over to Jamie for your kind of final thoughts, key takeaways for folks on, you've viewed the development of this space both from the field builder perspective as being the founding ED of the Ellen MacArthur Foundation, and now as a kind of key investor operating within this new industry. Who else have you seen that's doing impressive work, and what's a final thought you'd like to leave attendees with?
Yeah, so I think it's really interesting to view what's happening in the corporate space around this. Like we were saying before, there's a couple of projects which I think are really interesting. One of them people may have heard of before, the New Plastics Economy Project. And that actually looks at, as we said before, the fact that 95% of all plastics end up in landfill or end up in, for example, marine ecosystems. So the amount of plastic entering marine ecosystems now is a major concern. And so both from a kind of financial capturing more value and from an environmental perspective, globally, large corporate businesses are looking to see whether they can use the kind of framework of the circular economy to solve those two parallel issues. And what they're looking to do is say, what if we had a plastics economy that was designed by intent to be restorative? So we started to design an optimized palette of materials, which would then enable us to regenerate more of that material. So you've got big players like Unilever, for example, starting to make some very ambitious commitments publicly about how they're seeking to shift design practices and their supply chain to capture more of that value. You've got companies like Philips moving into, for example, selling light as a service, where they're now no longer selling the product of lighting equipment in some instances and starting to optimize their whole supply chain and design practices to do that. And this kind of brings me to, I guess, my final thoughts, which is, I remember whilst I was at the Ellen MacArthur Foundation, we were working with a group of design technology students, and one of them had said that they were doing an end of year project. They had an open design challenge, so they could design anything they wanted to. And they said to their teacher, before I learned about the circular economy, there was nothing I could think of really designing. But once I learned about the circular economy, everything I saw I wanted to redesign, whether it was a chair, whether it was a piece of IT equipment, etc. And I think it's the lens by which you look for these opportunities. And I think that applies to the management team of a medium-sized business, to a corporate management team or CEO, right the way through to an investor looking at where these opportunities exist. It's kind of the lens through which you look for that opportunity as much as the opportunities that exist or appear to exist today.
Fantastic. So I think that is probably a good spot to end. So I want to go ahead and thank the panelists, Jamie, Lisa, and Gerald, for making the time today. And to all of the attendees that spent their breakfast or lunch or dinner, as it may be, with us this afternoon. I will go ahead and turn it back over to Greg, and thanks again to everyone.
Thank you, everyone, for attending. That concludes our webinar. It is recorded, and we will have it on both the TIIP and the Toniic websites. Thank you very much.